Welcome back to Investing Talk Podcast. Today, we're taking a close look at an upcoming earnings report that's definitely got people talking. We're focusing on Equinox Gold, a pretty significant name in mining, as they get ready to release their financials. Our goal here is simple. Cut through the noise. We'll look at the data, what analysts are thinking, what the company's been saying, and really give you the clearest view of what to watch for and maybe what it all means. We're trying to get you quickly up to speed.
That's right. We've pulled together insights from, various places, pre-earnings notes, past performance, to give you a rounded picture. It's not just about the raw numbers, but the story behind them, the context.
Absolutely. And hey, before we jump in, if you find this kind of analysis helpful, please do think about subscribing, maybe liking the video, leaving a comment. Your feedback really does help us figure out what topics to cover next. And yeah, if there's a specific company or a market trend you want us to look into, just drop it in the comments below. We genuinely want to hear what's on your mind. Plus, if you feel like supporting the work we do here, you can always buy us a coffee. The link's usually somewhere down below. Okay, Equinox Gold. They're set to report on August 13th, 2025, after the market closes. So let's start with expectations. What are the analysts thinking heading into this one?
Well, it's interesting. For the June quarter itself, finding a solid agreed-upon revenue estimate is tricky. It's not clearly published everywhere, but looking at the full year, 2025, the forecast is for sales around $2.425 billion. So that gives us a broader target.
Okay, full year number. But what about the bottom line for the quarter, the EPS?
Ah, yes, the EPS. This is where it gets, well, kind of fascinating and maybe a bit concerning. We're seeing a really wide range in the consensus estimates. For example, Zacks has an estimate of $0.16 per share.
16 cents, okay. That sounds all right.
But then you look at NASDAQ, and their consensus is way down at $0.02 per share.
2 cents. Hold on. 16 versus 2.
Yeah.
That's a massive gap.
It really is. We're talking an 800% difference between those two numbers. And that kind of spread, it usually signals a high degree of uncertainty. Analysts seem really unsure about things like margins or maybe production costs for this specific quarter.
Yeah, you'd think they'd be closer than that.
Yeah.
So with such a divergence, is there any kind of whisper number out there? That unofficial figure the street sometimes really trades on?
Good question. But based on what we've seen, no. There isn't a widely reported whisper number for Equinox Gold this time around. It just reinforces that uncertainty. The market seems genuinely unsure what to expect here.
Okay, so huge uncertainty baked into the expectations. How does that stack up against their recent track record? Especially thinking about that EPS variance we talked about. Has they been hitting or missing lately?
Well, let's look back at Q1 2025. The company reported a loss of $0.08 per share, but the consensus expectation was actually for a profit of $0.14 per share.
Wow, okay. So they didn't just miss. They went from an expected profit to a loss.
Exactly. That was a huge negative surprise, about 157% off the mark. While we don't have, 10 years of data in front of us, that recent Q1 performance was a pretty significant miss. It definitely makes you cautious.
157% miss. Yeah, that'll raise some eyebrows. How does the stock typically react after these reports? Is it usually a big mover? Predictable?
It definitely tends to move. Historically, the price swings after earnings often meet or even slightly beat what the options market was implying. So yes, notable volatility. However, the data doesn't really show a consistent direction after earnings in recent quarters. It jumps around, but it's not like it always goes up or always goes down.
Volatile, but choppy then. Got it. Okay, shifting gears slightly. What about the company itself? What's management been saying? Any positive signals?
Yeah, on a more constructive note, management has guided for gold production to increase each quarter throughout 2025. That came after they hit a record Q1 production, actually over 145,000 ounces. And the big driver they keep pointing to is the ramp-up of their Greenstone mine.
Ah, Greenstone. That name keeps coming up.
It does. They say it's the key catalyst for operations and financials, and critically, they keep saying it's on track and improving steadily. That's the narrative they're pushing.
So a lot hinges on Greenstone delivering then. What else was going on during this specific quarter, Q2? Any major news beyond the ongoing Greenstone story? Mergers, sales, financing?
Not really, based on our sources. The main news flow is really just circling back to that record Q1 production, the successful winter operations they had at Greenstone, and just the ongoing efforts to get that mine fully up to speed. No major M&A, asset sales, or big financing deals seem to have happened in the quarter, so the focus really is laser sharp on operations right now.
Okay, pure operational execution focus. And what about the bigger picture? The gold market, the economy. How did that backdrop look for Equinox Gold?
Well, the gold sector itself has been volatile, no doubt, but things like inflation worries, the whole interest rate outlook uncertainty, global economic jitters, those things have generally been supportive for gold prices. Gold's been holding near multi-year highs, which is obviously a positive for any gold miner's revenue potential.
Right. Higher falling prices are good. Any headwinds on the cost side, though?
Yes, and that's the other side of the coin. Input costs, think energy, labor, supplies. Those remain a risk for miners. They can definitely squeeze margins even if gold prices are high. So it's a bit of a tug of war. Strong gold price tailwind, but potential cost headwinds.
Makes sense. And going back to that huge EPS disagreement between Zacks and NASDAQ, did any analysts change their tune significantly during the quarter? Any major upgrades or downgrades that might explain the split?
Surprisingly few, actually. We didn't find evidence of major, widely reported revisions, no big upgrades or downgrades during the period we looked at, which in itself is kind of telling. The fact that the estimates remain so far apart without much new commentary just underscores that high degree of uncertainty around margins or maybe production costs. It feels like analysts are kind of waiting for proof from the company.
Waiting for the results,
Well, yeah.
basically. Okay, so let's talk stock price action. Given the volatility and uncertainty, any technical levels traders might be watching as we head into the report? Support, resistance.
Yeah, keeping in mind the past volatility and lack of clear trend. From a technical perspective, you might look at, say, round numbers or maybe the $4.50 zone as potential support. That's an area where buyers might step in if things look weak. On the upside for resistance, maybe look at previous post-earnings highs or perhaps psychological levels like $5.50 or $6. A strong break above those could signal real positive momentum.
Okay, key levels to keep an eye on. And what about the options market? What kind of move is it pricing in right now for the day after earnings?
The options market is definitely expecting fireworks. Looking at the implied straddles, which gauge the expected percentage move up or down, suggests the market is bracing for a move somewhere in the 6% to 9% range.
6 to 9% in one day.
Mhm.
Okay,
Yeah.
so the market agrees it could be a big reaction.
Yeah, it's pricing in a significant swing. It tells you traders see potential for a substantial move, whichever way it goes. High stakes.
Definitely. So let's put it all together. We've got the uncertainty, the Greenstone focus, the options pricing. What does a bullish outcome look like here? What needs to happen for the stock to really pop?
Right, the bullish case. You probably need what's often called a beat and raise. So Q2 production would need to be strong. Or maybe their all-in sustaining costs, the AISC, would need to come in better, lower than expected. That needs to be paired with really positive, confident commentary on the Greenstone ramp-up progress, confirmation it's hitting targets, costs are under control. And then the cherry on top would be if they actually raise their full-year guidance for production or maybe margins. Combine that with strong gold prices, and you could see a really outsized move upwards.
Okay, beat, raise, positive Greenstone news. And the flip side, what sends this stock lower after the report?
The bearish scenario, well, obviously a miss on EPS or revenue would hurt, especially if it's blamed on production issues, maybe higher than expected costs, or specifically any negative news about Greenstone's progress. Even if the numbers aren't disastrous, if management sounds cautious in their forward guidance, maybe signals delays or margin pressure, that could easily spook investors and push the stock down, especially given the Q1 miss.
Right, any hint of trouble at Greenstone seems like it would be particularly damaging. So, boiling it all down, if our listeners could only track one thing when this report hits, what's the absolute most critical piece of information?
For Equinox Gold right now, I'd say it really comes down to the Greenstone ramp-up details, specifically the efficiency metrics and the reported quarterly gold production figures from that mine. The market sees Greenstone as absolutely pivotal for their growth this year and beyond. Its progress, or lack thereof, will be intensely scrutinized. That's the number one thing.
Greenstone progress. Got it.
Yeah.
Okay, so bringing this all home, what's the overall lean? Are we bullish, bearish, neutral heading into this report? And maybe a confidence level.
Yeah, weighing everything, the potential, the risks, the uncertainty. I'd have to lean neutral overall on this one. Let's give it a confidence score of, say, 5 out of 10.
5 out of 10. So basically a coin toss. Why neutral despite all the potential for a big move?
Exactly because of that potential, combined with the risk. It feels like Equinox Gold is at a really crucial turning point. You've got the massive operational risk associated with ramping up a major mine like Greenstone. That's never perfectly smooth. Plus, its fortunes are tied tightly to volatile gold prices. And then you factor in that huge earnings miss last quarter and those analyst estimates being all over the place. It just screams caution. There's too much uncertainty to confidently lean one way or the other beforehand.
That makes sense. A lot of moving parts, a lot of unknowns. So for listeners thinking about this report, any high-level strategy thoughts, maybe differentiating between risk-averse folks and those more willing to take a gamble?
Sure. If you're generally risk-averse, honestly, avoiding holding a position right through the earnings announcement might be the most prudent path given that potential 6-9% gap. Or if you are holding, using very tight stop-loss orders could make sense. Another tactic is just to wait, let the dust settle after the report, and look for a confirmed trend before jumping in. Now, for more risk-tolerant individuals, that high implied volatility does create opportunities. You could consider strategies like an option straddle or strangle, which profit from a big move in either direction. Given the history of volatile reactions, that's plausible. But making a straight directional bet just buying calls or puts feels particularly risky here because of all that uncertainty we've discussed. The odds of guessing right seem pretty low.
Really interesting considerations there. It truly is a company at a fascinating crossroads, isn't it? With Greenstone's success seemingly holding the key to its near-term future.
Absolutely. And I think the key question for you as you watch this play out is this. Will Equinox Gold finally show that the Greenstone improvements are translating into solid financial results? Will they beat those divergent estimates and prove the skeptics wrong? Or will the costs and the sheer complexity of scaling up that mine prove to be a bigger hurdle than expected in the short term, maybe confirming some of those lower analyst estimates? That's the core tension here.
A great question to keep in mind as the numbers come out. Thank you for walking us through all that complexity. Hopefully this gives everyone a much clearer perspective heading into the Equinox Gold report. We'll definitely be back soon with another analysis. And remember, if you found this discussion valuable, please do subscribe, like, maybe leave a comment. It really helps us out and lets us know what you find useful. Your support is genuinely appreciated. See you next time on Investing Talk Podcast.